Okay, so this week was a shortened week. We had a half day of trading on Monday, and then we had no trading on Tuesday for July 4th. But, it's funny. I was going to cover something that happened in the first part here where we filled gaps in the 10-year, but then we had kind of a collapse in the market here at the end of the day. The market had been up all day. This is Friday the 7th, July 7th, and been up pretty good for the day, pretty strong. And then just at the end, I'm going to say in the last, I don't know, hour and 15 minutes, the market came down. But we'll take a look at that here in a minute. Let's start with these 10-year yield that I follow because it really is a good harbinger of the other things like mortgage rates and things of that sort. So, we started. These are daily data, and we started the week right here, and then we actually went down on, on Monday, and then Wednesday we shot up. We shot up again on Thursday and shot up again today, but ended at the kind of in the middle of that candle. But we filled this gap over here. I've been waiting for this to get filled here, but we also filled this one up here over 4%. Now, if we want good things to happen in the market, that is, if you're a bull, we want to see this baby start to collapse here. But I have to say, even with this jump this week, for the most part, the market's held up fairly well. Now, if it starts heading up here towards this 4.3% that we had back in, when was that? October of last year, and then we started to kind of see this really just almost consolidation of yields since then. We don't really want to see that. I'd like to consider this to almost be a double top here. So if I go from here to there, that would be okay, and that way 4.roughly 1% yield for the 10-year would mark the end. So I'm hoping that this thing will start to go back down. Now we left a gap down here, so there's gaps below us. There's a small gap here, but anyway, that's let's hope if you're a bull that starts to turn over. That means good things for technology. But like I said, it's held up fairly well even with that. We did have kind of a rough week, and I thought maybe we were going to turn things around today, but we wound up down for the day on most of the indices except for the Russell. So here we are, kind of had topped out here, multiple touches up in this area, and then we had Wednesday, Thursday, Friday, the Dow Jones going down again. These are our weekly data, daily data. Then the SPY, went up, filled the gap here. That's what the yellow line is. This S&P 500, and then as we, like I said, pretty much the last hour and 15 minutes, that thing went down, and we could just almost see. Let me get to a 5-minute chart and reset the. But look at this. From roughly what 2:30 till close. That thing just really started to collapse. I was kind of unexpected because it really worked so hard the entire day, working its way back up, filling, this gap here between here and here. But now we've still got this gap up in this area, and I'll just mark that real quick because I'll have to do it over the weekend anyway. So we can kind of get rid of this one. but you know, we've still got some of this to go here. So anyway, it was an interesting day. Other than that, I really thought the market was, you know, coming on strong, and then it just kind of fell apart there at the end. And we'll see the same thing on the Qs. We'll see the same thing on the Dow, you know, and even on the Russell, which we'll cover here in just a second. But well, we can cover it now. But you know, it didn't get clobbered as bad, but it made a tremendous comeback. It was up over $3 today, which is a pretty big move for the Russell and the IWM. But going back to the daily, you know, we can see went back, filled the gap in the Russell, and you know, kind of still continued. It's kind of a disheartening candle here on Friday, but you know, if we look for the week, then you know it was down. You know, we've been making our trying to make our way back up, and kind of got beaten down a little bit. January 30th, I thought I would like to see us recover here, you know, each of these steps that happened before. You really don't want this to fall apart at this point. We do have some support down here, about 170 for the Russell. So anyway, you know, the fact that this got filled, now we need it to kind of start making its way back down. We want the dollar has started to make its way back down. It was down for the week. And if we look at daily, today especially, you know, came down. We got this, you know, uptrending yield line that I drew. And, you know, it's breakthrough here, you know, make its way down now. Now, you know, the good and bad of this is a weak dollar going here is going to make things more expensive for all of us. And then the crude, for looking at the daily, we can now kind of broken out of this pennant here, and you know, made its way up. Look at the weekly; it was, you know, kind of came out. Now, is that a false breakout? We'd have to, you know, we'll have to find out later. And then the interesting part was, you know, the VIX wound up, well, it was down for the day, and you know, despite that collapse. So it's really a strange, you know, market. We can take a look at, you know, resetting these. So it came down. I would have anticipated with that way that thing closed, that it would have gone all the way back up. But I'm just curious. Let's look at the last 5 minutes. Yeah, kind of, or a 5-minute chart. You can see that around that 230 mark, you know, things started to turn, and now we're turning back down. So hopefully that's going. Now, the thing I've been watching is the, you know, the percentage stocks over 200, and we didn't really make any progress on that. Matter of fact, we were down for the week. We'd like to see this number, you know, continue to make its way up. And we'll see how that goes. But really, for the market to fully go, to me, this has to make its way on up and get a lot greater breadth in the market. But, you know, if we draw a trend line in here, we could say here, you know, maybe we got something going on. Oops. Here, and you know, we'll have to keep an eye on it. But it was a kind of a sour ending to the day, is all I've really got to say about that. So economic numbers this week, starting from July 3rd. You can see the PMI, the ISM manufacturing PMI was down, and you know, employment under 50, so that's shrinking. Manufacturing's been shrinking for quite a while, and that's not good news. The factory orders came in quite a bit weaker than the expectation. The 30-year mortgage rate, 6.85%. That could definitely, well, if the rates stay up there over 4 for the 10-year, I guarantee you this thing's going to be closer to 7 by next Wednesday. But, if that could revert before then. The ADP number came out super strong on Thursday, and that was kind of led to a market sell-off. At that point, initial jobless claims were up, and then the JOLTS was anticipating pretty much in line with the job openings, and services still remain strong. That's where most of the jobs are. They're not high-paying jobs, but they're jobs nonetheless. Then today we had non-farm payroll. Surprisingly, after the ADP employment change came in, 209,000, which was weaker than consensus. So who knows what's going on with the employment numbers, as we look at them. And then if we look at next week, we got a bunch of Fed members coming out and giving speeches and telling awful things about, the markets, and, they're going to beat us up. And, everybody's expecting now a quarter point. I think it's priced in. That's going to go up. The second one, I think, really may be unnecessary, and for reasons we'll take a look at here in a minute. But then we obviously have the mortgage, and we have the CPI coming out next week, and core inflation. See 5%. What's the number going to be? These are market movers. More Fed member speeches, and then Thursday we got the PPI coming out. We had a good number last report, and then the Michigan Consumer Sentiment report, which shockingly keeps getting, kind of hanging in there despite everything that's happening, with the economy, especially manufacturing. Service industry is really the one propping these things up. So let's take a look at investor sentiment. We have 4.5% bearish. That number keeps going down. We got quite a few people that are neutral, but more people have moved into the bullish category. And so pullbacks are almost a given. When people get a little bit too greedy, we need a little bit of a pullback. Whether we just had it this week, I don't know. I'm hopeful that maybe after today things maybe will continue on the upside. And then on the fear and greed index, you have the extreme greed category. It was 80 a little bit earlier today, until that last minute collapse, and a week ago we were at 83. So with a little pullback in that, but not really much as far as sentiment goes. Let's see. The other thing I wanted to cover before I get into my final comments is the Truflation. I think I'm going to keep bringing this up. I think it's important for us to what the government is reporting versus what a set of new measures that might be a little bit more forward-looking. At 2.44%, it's been as low as 2.29. When was that? June 30th. So not but a week ago was it at a lower number. But the expectation here is if we're moving into deflation, we want to keep an eye on this number, and if it starts to go negative, we really don't want that to happen. It'll feel good at first, but overall, disinflation's okay. Deflation, not so much. Disinflation just means that the rate's coming down. My final comment, I want to go back to some of these, the Dow Jones, and I think one of the things that investors in general struggle with is perspective. So, we had kind of a bad 2 days, but if you take a look at larger time frames, some of these things start to not look so big. So we had was kind of a painful pullback to a certain degree, but it's really, in the scheme of things, it's not that much when we're looking at a monthly chart. And so when you one of the things that's important to do if you're investing or trading is to kind of pull things back and take a look at what's going on, because it can really give you perspective. Because if you're down on these numbers here, a 5-minute chart, oh my gosh, the world's coming to an end, type of thing. Especially if you were like looking at this, you'd think, okay, we had this big drop here and got over there. But I think it's important for people to, back it up. I always start with these charts. I look at the weekly next. I look at the daily, and it just gives you a little bit more perspective rather than looking at a 15-minute chart. Now, I know most investors don't look at a 15-minute chart, but it's getting perspective of what's happening. You get caught up in the day-to-day when these things go. SPY, same thing. Go back and you look at the monthly. It looks like no big deal. A little bit of a pullback and a pretty nice uptrend here. And you don't really see a lot of the stair step down that you saw when we were going through the bear market last year. And it get covered up. It makes things maybe look better, or smoothing out the data, if you want to use that word. And we're making progress. It wouldn't be a shocker to see this thing come back down, let's say to 4. I don't think we'd want to go any more than 432 or so from where we are now. But this thing could begin to build up again next week. Everybody's back. We didn't have that much volume going that brought this pullback. Didn't have much volume on this one, and therefore it kind of got this engulfing candle on the weekly chart. So if you're looking at how can you improve, these are some of the things that you need to do, is get used to looking at data from this. Now, this is TradingView. I don't have necessarily a link to it, but it's tradingview.com. You can see it up here, and you can sign up for a free account. And just if you want to follow some of this stuff that traders do, and improve your capabilities, this is one way to go about doing it. Anyway, that's what I wanted to cover in this short week. And remember, there is always a better way.